What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Intel Corporation, ticker symbol INTC. They just reported their earnings just moments ago, and I will walk you through them. So if you have any confusion about these numbers, or you just didn't want to read the report yourself, well, I'll tell you what, I'm going to walk you through, show you all the key facts and all the figures that we had in the most recent quarter. Take a look at it from a 6-month perspective as well. Revenue, profits, cash flows, balance sheet, all those things. And then we'll jump over to the stock chart with Intel as well. I had to do this on a weekly view. Okay, so this is a weekly chart. This goes all the way back to 2012. Some of you might have been pretty young in 2012. This thing has just been kind of whipsawing over the last few years or so. And so I had to stretch it out to a weekly view. We'll talk about what we see from a technical perspective here, the key levels with Intel. Now, they came out with their results today after the bell, the Q2 results. What they did, we'll get into the numbers in the quarter here, but more importantly, they raised guidance. So they're now expecting a GAAP revenue of $77.6 billion. The consensus prior to that was basically $73 billion. That was on this non-GAAP revenue, which they are projecting just slightly higher, not just slightly higher, but about $1 billion higher on the non-GAAP side over consensus. Now, the EPS is expected to come in at about $4.80. The guidance previously was for about $4.60, and $4.11 was about where the street was at. So, all things being considered from a revenue and earnings perspective, Intel is showing that the rest of the year should be quite well. Now, let's talk about the beginning of the year, the first 6 months, and more importantly, the last 3 months for Intel, since those are the numbers that we just got. We've got our statement of operations here. We've got our net revenue here. Left-hand column is the most recent quarter. We came in at $19.63 billion. You notice that actually came in a little bit light over where we were a year ago during this time. And we see for the 6 month as well, we're under just fractionally where we were a year ago on a 3-month basis and a 6 month basis when it comes to revenue. Now, what they're doing a good job over at Intel is squeezing more money out of what they're selling, because we noticed that the cost of sales actually went down. It went to $8.4 billion, down from $9.2. Same thing for the full year, although it ticked up just fractionally for the full year on that 6-month view. So our gross margin, even though we had declining revenues, again, that's basically flat. From a rounding perspective, that's basically flat. But we noticed that our gross margin actually went from $10.5 billion up to $11.2 billion in the most recent quarter. And you see for the 6 month, almost flat. Okay, we're off by about, what's that, $460 million, which is essentially a rounding error when you're talking about $22 billion worth of gross profit from a 6-month perspective. Now, we've got research and development that ticked up in the most recent quarter. We got marketing, selling, and general administrative that ticked up in the quarter, and we've got some restructuring charges as well. Those are relatively minor. We get to our total operating expenses coming in at $5.66 billion. That's over where we were last period at $4.8 billion. And you see for the 6 months, our operating expenses are rising. So while we expanded margins in the quarter, our operating expenses are expanding over at Intel. For the last 6 months, we went from about $9.8 billion up to about $12.8 billion. So that's going to impact our operating income here. So gross margin is what you make after you factor in cost of sales. Operating income is after you factor in all the cost operating the business, the salaries, the research and development, all that type of stuff. That gets us down to operating income of we'll call that $5.55 billion in the last 3 months. That is coming up short of where we were last year, right around $5.7 billion. And for the 6 months, it paints an even bleaker story. Went from 12.7 down to $9.2 billion. You can see why the stock, yes, over the last few years, it has gone from a $20, $30 stock all the way as high as $60, $70. But if I pulled up a chart of NVIDIA or AMD or some of these other chip makers out there, boy, their stock charts even look more impressive than that. So Intel, in some cases, is a lagger of the group. All things being considered, things are looking okay. This isn't AMD, this isn't NVIDIA, but you're certainly not paying a premium in terms of price to sales, price to earnings like you will with those companies. So there could be some value here, especially if you believe Intel will turn things around. Now, coming over to the balance sheet, got plenty of stuff going on here. One last thing I wanted to show you. So they are executing a stock buyback over at Intel, and this is for the last 3 months or so. They didn't repurchase any shares over the last 3 months, but they've repurchased 5.8 billion shares, and they still have about $7.2 billion worth left on that buyback. So if you believe that that might support the shares as well, that could be beneficial to you, the shareholder. Now, moving over to the balance sheet, we've got about $7 billion, 7.7 in this. This is basically cash. I'm assuming this trading assets at about 17 billion. That's probably roughly cash as well. And you got another 7.5 in receivables. All things being considered, you got tons of money up here if you want to invest in the company. Now, in terms of inventory, you like for a company like this to probably have some inventory considering how hot chips are, not only in computers, but in cars and trucks, and just about everything out there needs a computer chip these days. They have some inventory, and it looks like it's in line or just slightly where we were at the beginning of the year. Now, this company does have some short-term debt. Here it is. We went from 2.5 up to 3.7, but most of that looks like it got peeled off our long-term debt. So sometimes when you come down here, you see long-term debt at the beginning of the year was at 30. We'll just call that 34 billion, and now it's at 31.7. Well, most of it looks like got peeled up into here to short-term debt. So debt down here is debt. Think about this like your mortgage, okay? Your total amount you owe on your house is your total amount of debt. What you have to pay in mortgage payments is really your short-term debt, right? Because you're not going to pay your house off this year, especially if you owe hundreds of thousands of dollars, or at least most people won't. But you'll probably make all your mortgage payments, and that's essentially what short-term debt is for Intel. Now, coming over to cash flows. So talked about how revenue was declined a little bit. It didn't look that great from a net income perspective. We didn't really take a look at that number, but that came in at $8.4 billion over the last 6 months. You see we're at 10.7 in the previous period. Let's see if cash flows paints a different story, because sometimes you've got things like depreciation, stock-based compensation, restructuring charge. Those can play with net income. That's why when I look at these financials, you might say, well, you didn't come down to earnings per share. You didn't come down to net income. I don't normally do that because you've got income taxes. And look, depending on who's in the White House and who's not in the White House, income taxes can change, okay? And depending on how well this company is taking advantage of tax laws, those things can change. You got interest and other things. I just typically focus on operating income, okay? Because this is what gives you a very clean view of the business. And we do see, hey, look, it is on a decline on the last 3 months, although just fractionally, but on the last 6 months, it's declined quite a bit. So let's come down to cash flows. It could be that we have some other charges in here. We get to add back some of those stuff, and we come down here to net cash provided by operating activities. We're still seeing the business just slide. I don't want to say deteriorate. I think that's too strong of a word. We're just basically stuck in neutral on this one. We went from 17.3 down to about $14.3 billion. Maybe we can say this business is still transitioning. They've got a new CEO. They've got some new products they're working on. They're working on a new fab facility, I believe, in New Mexico. They're working on some things that are transitioning, and maybe we're in the midst of that. Now, in terms of operating activities, they did a little bit more investment in property, plant, and equipment. All things being considered, that was actually down over the last year or so. And then net cash provided by investing activities, we see issuance of long-term debt. They didn't do that this year. And so a lot of companies this time last year in June, this is the right-hand column, everybody drew on their credit line because nobody was sure what was going to happen this year. Now everybody's realizing, hey, things are going pretty good. We're not going to draw on this credit line. So they didn't this year. We did repurchase some stock over the last 6 months. That's sitting at $2.4 billion. They did pay some dividends to you, the shareholder, as well. All things being considered from a cash flow perspective, again, doesn't paint a rosy picture with Intel, but it could be a lot worse, in my opinion. And then finally, when we get into like kind of the segment results, we're seeing the client computing group. I believe this is like computers and those types of things. We're still seeing strong performance year over year on a quarterly basis and year over year on a 6-month basis as well. We're just seeing strong growth there. Where we saw the declines was actually in this data center group. So we're actually seeing declines there. It could be that NVIDIA's taking away market share there. Could be AMD, could be some other makers out there that are just clawing at Intel's business here. It just seems like this business is moving down, and that is not necessarily a good thing, because I think a lot of us can agree the client computing business can be somewhat lumpy. Okay, you had a pull forward and a lot of people needing tablets and work from home PCs. Well, that could go away. People's computers can last a while. They don't necessarily have to upgrade year after year or every 2 years. And so we could see this slide. If we start seeing the client computing group revenue slide and the data center group slide, well, then revenues would go down. But I want to remind you that management did up revenue guidance and earnings guidance, so they obviously are seeing some things in the marketplace that aren't printed here on these numbers. Now, moving over from a technical perspective, in general, the trend on this stock is up, okay? Because look, back in 2013, we were at 19 bucks. Again, I'm on a weekly view here because when on a daily view, it just looked really weird. You have all these gaps and just, it's really seesawed. So I'm going to zoom in to a little bit tighter view. We've really got actually a 3-year window here. This stock has been trading sideways. For the most part, it's been trading sideways between $44 and about $58 per share. That's where the bulk of this price action is. Now, occasionally we've blown off up to the top, up to about $68 per share, but it hasn't hung out there long, just a couple weeks at a time, and then it comes crashing down. Notice where we're at right now. The stock is right here at $55 per share. This is what I would say is very, very, very close to about the middle of this range. So where would I buy Intel? And this doesn't necessarily make a lot of sense to maybe newer investors, and certainly myself several years ago. Some people might say, well, you could get in here at 54 and then you peak up here to 58 and you peak up above that and you're on your way up to 68. Well, you sure be glad you got it at $55, $54 a share, which is about where Intel is trading right now. I would say no. These are the levels where I would buy Intel, not right here at 54. Obviously, I would buy it lower. And where would I buy it? I think I'd start buying if I wanted to get in this name. I'm already long NVIDIA. I'm already long AMD. And I think if Intel has any significant pullback, chances are NVIDIA and AMD would have a pullback. I'd probably be more wise or probably more amped to add to those positions instead of starting a new one in Intel. But anywhere down here between $44 and $46 per share, we've seen over the last 3 years, demand has picked up for the stock when it's come down into this area. And this is really only about $10 off of where the stock is trading right now. I know that's, about a 20% move, but we've seen stocks move rather quickly, and this stock could get down here. Anywhere between $44 and $46, in my opinion, probably a buying opportunity for Intel. Now, at the current price at $54.75, wouldn't be excited about getting in here. I tell you where I'd be excited about it. Obviously, down here where we see a layer of support, but I'd actually be excited about Intel at a higher price. I know that doesn't always make sense to a lot of investors, but I'd want to see technically we get above this level. It was an area of resistance, and this level I'm referring to is right at about $58 per share. It was resistance here. $58 was resistance here. $58 was resistance here. It acted as a level of support right here. When you break through it, boy, it wants to chop down through. And again, once we broke above 58, this stock tends to run. I'd be interested in this stock over 58 and let it run up to 64, 65, maybe even 66, 67, $68. And I'd want to be a seller up here. Now, again, if you break above this $68 range for whatever reason on Intel, well, then it's off to the races. This thing could probably go to 78, 80, 90, $100 per share pretty quickly, but you'd have to get above these highs, and it would not be an easy thing, in my opinion. So that's my opinion technically on Intel. We're smack dab in the middle of a range. I'd like it much lower, and I'd like it actually, believe it or not, a little bit higher. Where it's at right now is it's in the middle of a pool. I either want to go to the shallow end of the pool or I want to go to the deep end of the pool. I don't want to be in the middle of this pool. I want to wait until we come down here or we break above to kind of give me more clarity on where this stock is heading. So that was Intel. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.